George of the jungle, strong as he can be.
All right, so let's talk about part 3 of 4 of no down payment loans. And actually I'm going to be combining two different federal programs into one here because there's a lot of similarities between the two. One of them is the CRA, or Community Reinvestment Act loans. Those are done by local banks and credit unions. Now these are some really good loans. Again, these are zero money down loans. They have pretty good interest rates and they have no mortgage insurance. However, okay, there's going to be the if here. They have a geographic limitation. Okay, it has to be certain areas that the bank has determined are targeted areas that are going to be where they're going to lend the money. And then there's some income caps on it. And just like the grant programs and like Utah Housing, when I get talking about that, or you're just going to find out that, okay, here's a home and it's for sale for $300,000. Well, somebody with just even a modest amount of debt, they're going to need to make at least a $50,000 income to qualify for that. And if they have a little bit of debt, they're going to need to make $60,000. So they'll have an income cap on it. Let's just say it's a single woman, or maybe a woman with one child or something like that. The income cap on some of these might be capped at $48,000. So the good news is that you're below the income cap. The bad news is there are no properties for sale in the target area in the price range that you qualify for. So again, these are there's a lot of mortgage companies and real estate agents that go out there and they use the no money down thing as a throw it out there as a big net, because people sit there and go, ooh, that's what I want. I want a house with no money down. And then by the time you go in and you figure out all your options and everything else, well, you know what, you make too much money to qualify for this, or you make a low enough amount of money that you qualify for the grant program or for the CRA program, Community Reinvestment Act program, but there's no properties. Okay, so the CRA program is one, Community Reinvestment Act. The other one is the Community Block Grant Development Loans. Now this has been around for a long time, and in the state of Utah, it's cdcutah.org. It's kind of a catch-all website that will cover a lot of the areas, but then it'll give you also links to other municipalities along the Wasatch Front. And these grants can go anywhere from $5,000 to $15,000, and I think there's every now and then there's some that'll go for more. And these are nice because this is money that is given to you for the down payment, and most people doing this loan program or with these grants, they would be getting an FHA loan and then using the $5,000 or $10,000 or whatever that amount of grant is going to be. It will be used for the down payment or to supplement the down payment so that the borrower would have to come up with the difference. Okay, so if it's a $10,000 down payment, you got $5,000 of it from the grant, then you can go ahead and just come up with half of what you would normally come up with. Now, what are the hooks on this? Again, you're going to have some targeted areas. It's going to be areas where they are targeting to reinvest or to try to go into maybe a blighted neighborhood, a neighborhood that maybe has a little bit, might be some issues with rundown houses, or maybe not the best schools, or whatever the issue may be there. And then, is the money free? Kind of. It is, because you're not going to have a monthly payment on the money that you have for the grant. And depending on the municipality and the type of grant and everything else, it is a silent second mortgage on the house. So in other words, there's going to be a trust deed recorded that shows that, okay, there was money funded to subsidize the down payment for this home, but that money needs to get paid back unless you live in the house for a certain number of years. And that can be anywhere from 5 years to 15 years. So it's a silent second. But for somebody who buys the home and is going to live in it for even 2 or 3 years, you know, if the property goes up in value $30,000 and you got to pay back $5,000 of what you had to borrow, you know, or get a grant to be able to do in there, you're just paying back the principal amount of the grant. You're not paying back any interest or anything else on it. It's still a great deal. But again, the challenge with these is that based on the size of the household, and you can look it up here on the link that I'm going to show on the screen, that there's some income caps on there, and if you fit inside of the income cap, the good news is that you're not making too much money, but you're also probably not making enough money. Or when you go and start looking at the houses, you're going to find out that I don't like these houses and I don't want to live in this neighborhood. So again, that's part of the give and take. And there's a lot of times where, you know what, these are great programs, and when you find somebody where it fits in the box, and I do a handful of these, I do the block grant community, I do those loans, but not the CRA loans. Those are done through local banks and credit unions, so a mortgage banker or a mortgage broker is not going to be able to offer the CRA loan. So anyway, hopefully that's just something else to put on the platter of options for you to look at. Thanks for coming into thecreditjungle.com. Push button, get mortgage professional. This is George Anderson, and I hope to talk with you soon. Have a great day.